May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Today is Thursday, November 3rd, the day after the Fed meeting. Dun, dun, dun. All right, so hopefully you read the statement yesterday. Hopefully you compared yesterday's statement with the previous statement and realized why we had that green candle at the release of the statement, that the market sort of thought like, was the Fed indicating that a slowdown was imminent? But then when Powell came out and spoke, you realized that no, a slowdown is not imminent. I think that what stood out for me the most was the fact that I think they're surprised by the high inflation. And I think they're surprised by like everything they've done so far, not bringing that inflation down. But look at what they were doing last year. Anybody who is looking at last year's, and also during COVID, look at the last couple of years, right, which is what they're speaking about in terms of the cumulative minimum tightening, right? And that insane QE they had going into the market. Anybody with half a brain could have looked at that and said, this is going to cause insane inflation. Of course, they had no idea that the Russia-Ukraine thing was going to happen and the effect that would have on energy prices. But the fact is, here we are, and you can see clearly the Fed are not done. If you look at the vote split, notice how there was no vote split. That's where I look on the statements. If I start seeing dissent in the voting, then I know that change is coming, right? And you can see everybody standing on the same side, voting for that hike. So now everyone's looking to December, and yes, we are data dependent. We're going to start paying attention to data, but ultimately, Powell was very clear in the fact that there's still a long way to go, and it is way too early to be talking about slowing down. So looking at our QuantBox tool, we can see euro dollar, there is no fundamental reason to be buying, okay? Which we said yesterday very clearly, right? In terms of news coming out of the in the London session today, we got some high and low impact news coming out of Spain, Italy. Let's take a look at what else we got on the slate today. We got some low and high impact news, some low news coming out of France and Cyprus, some high impact news coming out of the Euro area, some low impact news coming out of France. So we got a couple of news events today, some more coming out of Cyprus and Greece, and you can see the spread over here. So there's some news. We got some low and medium tier news. Oh, this is the States, right? So later on, we got some low and medium impact news. Obviously, very important to be paying attention to the news out of America, specifically to what the Fed are looking at, okay? I mean, again, you look at the inflation right now, 8.2%, with a target of 2%. We are very, very, very much above that number, okay? So no reason to be buying euro dollar at all. Lots of high impact news. We've got quite a news slate coming up later on in the States, but that's the New York session. So it's business as usual, guys. You know, we continue paying attention to the fundamentals. As I said to you yesterday, I'm not worried about the trend reading and the technical stuff because I can do technical analysis. What I do want is I want to know what's happening with the fundamental data. And as you can see, it's red across the board. Now, we got to start moving into pound dollar. If you've been trading pound dollar this week because you've looked at doing a sort of double barrel shotgun with regards to the Fed and the BOE, well, then you're probably already in a trade from earlier this week, which I identified yesterday. It was a trade that took place earlier this week at a New York stock exchange session. We'll look at the technicals in a moment, but right now you can see that we've got a little bit of mixture. Well, we've got seasonality as a 1. I'm not worried about that because, okay, so here's the thing. Fundamentals will always override seasonality. That's just how that works. You're always going to have a situation where you've got if the fundamentals are speaking about a central bank doing something or a need for the market to expand or contract or whatever the case may be, or there's something going on with geopolitical events, that's always going to override seasonality. So we can pay attention to seasonality, but the more important data in front of you is COT data because that's actual positions in the market. GDP growth, inflation, unemployment, interest rates. That's the stuff that's really, really important. Seasonality is like, well, if I've got a reason to buy and my seasonality says bullish, then let's go for it. And if my trend reading says too, well, again, I'm not looking at the technicals on QuantBox. I'm paying attention to this beautiful summary of fundamental data. That's the gold in QuantBox, okay? So you can see there, look at the pound inflation. Now, of course, a number of central banks, you heard yesterday, IMF also warning, what happens globally if there's all this tightening. Of course, the big concern is debt, right? So the BOE chair said the same thing. We'll see what he says on Thursday. In terms of news out of the UK today, we got some medium and high tier news. In fact, hold on a second. Today is Thursday. My apologies. Today is Super Thursday. So we got a BOE meeting today, guys. So as I said, if you double barreled the pound dollar because you were looking for you had a view on the Fed and you have a view on the BOE, then today might just be that day where you make those perps. We'll take a look at that in a moment. So yeah, so very big meeting coming up later. We'll see if we can get into any trades. I think that the opportunities took place earlier this week. And right now you're just riding that trade down if it goes in that direction. So we'll get into the technicals in a moment. USD CAD. For a moment there, I lost the day. I don't know why I thought it was Wednesday. I even announced that today's QuantBox is November, Thursday, the 13th. All right, so here's USD CAD, strong buy. Again, look at the data across the board, okay? So inflation -1. All right, cool. Inflation sitting at 6.9, okay? So we got some Canadian news out later on. High impact, low impact. And then the dollar over there. So, all right, cool. Well, we'll take a look at the technicals in a moment on that, but you can see still a strong buy. We'll have a look and see if we're in position for that. Then Aussie USD is still a sell, okay? And again, we've got a number of reasons to be bears, okay? No Aussie news, of course, because it's the London session. Kiwi dollar, we're still neutral, okay? So we leave that alone. Yen pairs, we've got neutrality on Aussie yen, CAD yen, Euro yen, pound yen, and Kiwi yen. So I'm leaving those alone. Okay, we still got some issues with the Kiwi yen data. So I'm leaving that alone. They're obviously working on that. So we'll leave the yen pairs alone. I think there's enough to focus on in terms of the dollar pairs. So starting with Aussie USD, as you can see, price continues to move down. Have I had an opportunity to sell at a roll reversal? Looking at the 4-hour time frame, you can see that the previous, I think it was Tuesday, an opportunity off of this roll reversal over here. So you can see if you took that and you had a wide enough stop, and I think a wide enough stop, sort of 50 pips, then you're still in that trade and you're having a great day and your target is down here. Beyond that, now that we've broken down below this level, we're looking for a pullback to that level, okay? I don't use perceived support and resistance levels. I wait for price to close and I look to see if price is closed at any kind of resistance. You can see there, we got that wick, price closing at that wick over there on the pullback today. And that's a 4 o'clock candle. So that is a London bias candle. Here's my rule. Price is currently out of position. You can see there, weekly central, weekly M2. This is a buy zone. The only time I will trade out of position is if price is coming off of a 21 EMA or if price is closed at a roll reversal. Now, one could argue that this wick over here represents a roll reversal, okay? And so you could say, well, if that is bearish, price closing at that resistance, then moving down to H1, you could then verify it lower time frame. You can see that represents an H1 21. Okay. My concern here with regards to the H1 time frame is look at how low price is. If we were sitting over here at London Open, I'd be a lot more likely to sell that. You can see there's a roll reversal there. That's bearish. Coming up with 21 EMA, totally happy to sell high. Right now, price going down. I don't sell red candles. I sell green candles. I'm not looking to buy this. So that means got to leave this trade alone. If you got in off this roll reversal earlier, this morning, that's fine. You know, that's however you trade. I prefer trading market opens, but again, it's whatever works for you. As long as you can do that consistently and it yields results, then you're in that trade right now. You got to be thinking about where you're going to take profit on that trade. Are you taking profit on that trade? Is it something you're going to run down to the weekly target? What are you thinking about in terms of the daily target? I think the best idea there is to pay attention to price action in the following market opens. There's no reason for Aussie dollar to be going up. However, you've got to be careful of profit taking, right? So keep an eye on that. But in terms of the London session, I don't see an opportunity to trade for London. I'd like to see a pullback, lower low, lower high. And let's see that through the course of today or tomorrow as price moves around. Looking at the euro dollar, still in my euro dollar trade that we took earlier this week that I set up for us on Monday. So that's beautiful. Price continued to come down, stunning stuff. So looking at the chart here, we spoke on Friday about, remember we took the, so not Friday, Monday. We spoke on Monday about price being in a roll reversal. I verified the trade, low time frames, took that trade. Another opportunity coming up over here yesterday. Was this yesterday? The first, sorry, 2 days ago. Another opportunity there. And of course, if you had a wide enough stop, you were totally fine. All right. If you move yourself to break even out of fear, then you would have been knocked out and price continue going down. That's why if you take a trade, be willing to accept the risk of the trade. That's how you do business, right? You can't exit a deal halfway because you got butterflies in your stomach. This game takes nerves of steel, my friends. Right? You've got to have conviction. You've got to stand for something or you'll fall for anything. And yesterday, when you saw price coming up, that big green candle, sure, it's scary. You look at that price coming up, coming up, coming up, coming up. What do? You just look at the chart and say, well, if I get knocked out, I get knocked out. You don't move the stop. You leave it where it is. And then you also realize that there's with inflation of 8%, do you think the Fed's going to slow down on their rate hikes? Really and truly, not a chance, right? You heard what Powell said about how inflation is affecting the economy. So, and of course, they've got concerns about increasing interest rates, but they've got to continue going because that's the tool, right? So as price came up, then Powell starts speaking, and then very quickly the market realizes, hold on a second, let's get in the right direction of this trade. If you're looking at the 4-hour time frame, if you sold up here at these roll reversals, you were totally fine. If you were trading yesterday and you were trading off of these levels over here, you had a very hard time. That's why I like to identify roll reversals on the H4 time frame, because I get in much, much, much higher. Okay. So right now, in terms of euro dollar for today, you can see price coming up and pulling into this resistance over here. That is a 4 o'clock candle, which is the London bias candle. Problem is right now, again, same with the Aussie USD, price is low. I'm not looking to sell this. If you traded earlier today and you were sort of looking at this and saying, I've got that roll reversal 4 hour, and you looked at your 21 EMA on the H1 time frame, very much out of position. Okay, be aware of that. If you took the trade based on your lower time frame, you'd be looking for a lower low, lower high. Let's see if we can identify it on the M5 time frame. So you could, there it is right there. If you took it off of this, if that was your indication to get into the trade, 100%. The thing is, though, where are you getting out? And are you getting out? Because, you know, as price goes down, fantastic. Being in high is wonderful because you get to make money off of those drops. But as you sell lower down, you're going to be worried about those pullbacks. I'm not saying you should, if you're in a trade, get out of it. I'm just saying make sure you manage your expectations. Ultimately, you know, waiting for a pullback. And I recognize the fact that we've broken the support. It has not been tested. Okay. So I expect a pullback to that level in the future. I'm not sure when, but I imagine we will come back and test that at some point in time. So in terms of the euro dollar today, I don't see an opportunity at this London open session. Again, if you enter trade for Monday, you're letting that winner run and you continue to make money on that trade. Well done to those of you who took that trade. Pound dollar. Okay, let's talk pound because BOE later today. All right, so from a daily perspective, you can see that a few days ago, we broke under, we then tucked into this resistance over here, okay? On the H4 time frame, let's just get this lined up to H4. Hold on a second, this is supposed to be H1. Let's just move this chart like so. Okay, H4, looking at price, we still identified this yesterday and said, well, you know, if you sold at that roll reversal, you're hundreds. Look at that over there. If you had a stop that was just 50 pips, you were totally safe yesterday, and now you're riding this down as we head into BOE, right? So if you're in that trade, you've got nothing to do today. If you are not in that trade, then in terms of the London session, I don't see a pullback to roll reversal on the H4 timeframe. Okay, price is continuing down, so continue to trade yesterday's Fed decision, and I would like to see a pullback to roll reversal before I take a trade on pound dollar. I haven't got that today. Oh well, it's got to just continue running, right? Got to trade in a consistent fashion, otherwise you will not be a consistent trader. Looking at the H1, there's nothing to see here because I don't have a roll reversal H4. I've got no reason to go to the lower time frames. That's how I trade. Looking at the Kiwi dollar, we saw neutrality on that, so we're going to leave that alone. And then USD CAD buy. Okay, so you can see price coming off that M2. We still identified that as being in position, and we still said, okay, cool. Not, wouldn't mind buying over here, but we'd love to see a higher high, higher low roll reversal taking place. And looking at the chart right now, you can see we don't have one. Okay, price comes up, makes this high, then price comes down, breaks this support. If you identified the bottom of the range here, and that was your signal for getting in, totally fine. That's also bullish integrity. Nothing wrong with buying at the bottom of the range. Because you got a fundamental bias of bullish, you got a weekly M2, you got a monthly M2, you saw yourself as an opportunity to load your trade over here because previous month you were out of position, now suddenly you're in position, and you're looking to see, well, can I take this up to the top of the range, or can I get this coming up to a profit-taking zone? Okay, so if you did that, then that's great. Looking at the H1 time frame in that situation, you had a daily S2, and this was more towards the New York session. Okay, and looking at the M15 down there, you didn't really have a high low, but look at this over here. Yesterday, price coming down. Actually, no, that was a bit lower down over there. Price touching the support over here. Difficult trade to buy if you ask me. I don't see any roll reversals on this. And so I'm waiting for that to take place. Until then, I'm very patient. You'll notice my trading is very infrequent. But when I take a trade that I'm pretty sure I'm going to win. The only way I'd lose is if I've made a mistake in my technical analysis. But because I'm looking for roll reversals the entire time, I'm only looking to trade trends. I don't muddle up my mind with regards to having to manage those trades later. If I suddenly start trading low volatility and start trading ranges, I've got to focus on getting out of those trades. I don't like to confuse my brain. I'd rather just focus on trading trends. That's me personally. You do you, whatever works for you. But me personally, I'm not looking at USD CAD right now and seeing any opportunity to buy. Okay, I want to get into a trade that runs for a significant period of time. For me, that's a trend. So looking at the yen pairs, all neutral. I'm not even going to pay attention to them. Right now, sitting at London, basically the summary of the session is I've got a euro dollar trade. Going to let that trade continue to run. And then I'm looking at the dollar pairs and waiting for pullbacks to sell, pullbacks to sell, pullbacks to sell. I have no reason to be to not be a bull on the US dollar. I want to continue buying dollar as long as the Fed continues increasing interest rates. And I'll obviously be very careful on days when there's significant news coming out. But if there are setups and prices that are roll reversal, I'm going to trade that. Okay, and preferably on the H4 daily time frame or H4 time frame at market opens. So that's the situation today. To those of you who are in trades from earlier this week, well done. If you're still in those trades, you have survived those trades, well done, especially if you got that pound dollar trade over here at New York Stock Exchange on the first. Solid job. Your week is done. Now you're going to sit back and just see, does the market agree with you? What happens as the BOE approaches? What are you going to do to manage your risk? Personally, if I've taken a trade, I accept the fact that I've got the money to risk. And so therefore, unless I've got price making lower lows and lower highs, I would not move my stop to break even or move it to map. I'm happy to leave my trade at risk. And the reason why I do that is because you could see yesterday on euro dollar, if I had have moved my stop to break even out of fear, I would have been knocked out and price would have continued going down. Whereas I could have just accepted the risk and said, if I get knocked out, I get knocked out. It's just one trade. But if this goes in my direction because I have a view on fundamentals and the market realizes that, whatever this is just ridiculous reaction emotionally. And once it continues course, then I'm totally fine. Price could have come up and knocked me out. And if it had of, I would have been like, okay, well, that's how that works. Then I'll wait for an opportunity for price to pull back up to resistance, get to a roll reversal, and then take a trade. That's the nature of our business, friends. You've got to have that strong psychology, okay? You got you. I think that if you look at two different types of traders, the trader with a solid strategy who has weak psychology and a trader with a somewhat mediocre strategy but a strong psychology, the latter will always win. Psychology is everything in this game, my friends. So do what you need to do to work on that so that you can have conviction. And what I recommend where you can start is have a plan when you open your trade and know what you're doing in terms of how you want to close that trade. Have a plan for entering and exiting and stand your ground, win or lose. You must be able to take a loss. All right, friends, have a nice day. I look forward to seeing you tomorrow. Good luck with BOE today. Stay safe, stay disciplined, stay patient, and stay liquid. Cheers.